Did we just lose Crystal? Oh no. Alan, it's all you. Welcome to.
Did we lose her?
Yeah.
Oh, now she's the host. She was doing the
Oh,
host.
she's back
Sorry
on now.
about that, you guys.
It's okay.
I'm struggling. We're gonna have to totally edit this, but that's okay. That is fine.
You're
Let me
doing
make sure
fantastic.
I know, right? Today's one of those days. Okay, you guys, here we go. Welcome back to another exciting episode of the Crypto Caniverse, an international faith-based show that serves as a hub for visionary entrepreneurs operating at 4 key domains: Christ, crypto, CPAs, and cannabis. All faiths are welcome. The show is hosted by myself, Crystal Wampler, the glue that binds us together, and our spiritual leader, Alan Lau. How are you doing today, Alan?
I'm doing great. I'm very excited to thank you for everyone for joining our Crypto Camera show. And I think, Crystal, this is our, 90th episode.
Yay!
Very excited to have everyone here. I know we have some amazing people that's our speaker today, and love to hear and listen to their journey in the crypto space and how they're adding value to our overall ecosystem. So super excited today, and thank you so much for everyone for being here.
Thank you, Alan. Alan, can you please present our Bible verse for today?
Yes, Crystal, love this Bible verse. It comes from Romans 12:19. Beloved, do not avenge yourself, but rather give place to wrath. For it is written, vengeance is mine, I will repay, says the Lord. So I meditated on this verse earlier, and the verse reminds me to let go of revenge, trust God's justice, and break the cycle of hurt. It's about faith, letting go, trusting God, and choosing peace. Because oftentimes I think we either overthink or we have built up vengeance in ourselves for whatever reason. And it's always good to let go and let God handle it. So I love this verse. Thank you, Crystal.
Amen. Thank you for sharing that, Alan. I appreciate that. Our guest co-host today is Kenneth Knoll, aka Crypto Kenny, an avid investor, serial entrepreneur, and CEO and co-founder of one of my favorite blockchain development companies, BlockSafe Solutions. Welcome, Kenny.
Thank you. Thank you for having me, Crystal. Love being able to be back on the show these last couple of weeks and get to talk to everybody here. Amazing panel today. It's nice to meet each of you individually, those that I haven't before. Obviously, I work very closely with Clayton and Amanda. It's nice to see you again, but it's nice to meet everybody here.
Thank you. Thank you for joining us again this week. We appreciate you. You know, Kenny, tell our viewers a little bit about BlockSafe Solutions and what kinds of things you are personally investing in.
Yeah, for sure. It's been a crazy month for just development in the space and, investment ramping back up over the next couple of months. At least for me personally and my network. We're really excited this month. We've been looking into liquid staking has been new liquid staking protocols have been very interesting lately. We've done some investment in that area. There's a meta going on right now, obviously, of a lot of airdrops across new layer ones and things like this. So we've been developing some protocols, software to kind of do that manually, which has been fun, kind of an interesting little thing to work with. And then we've seen a lot of developing entertainment in the last couple of months. We brought on, I believe, 3 or 4 new clients, all centering around some level of entertainment with blockchain mechanics attached to it, which has been really interesting. I think that's going to be a big meta this coming year. But that's just some of the highlights of what I've seen in the last 30 days or so in the space. It's starting to get interesting. We've had this year of this last year and a half or so building and kind of quiet, and you can feel the momentum coming back, the interest from retail and institutional investment coming back. And I think we're just the very beginnings of that. So it's very exciting.
That is very exciting. Thank you again for being here. Kenny, where can our viewers find you?
blocksafe.space. If you're interested in looking at development services, help kind of at the beginning, middle, or kind of polishing of a project that you're looking to either fully develop in Web3 or to add Web3 components to, so you can look us up there at blocksafe.space. I am Crypto Kenny on Twitter and also Crypto Kenny in Discord. Very open to conversation. I'm a connector and very interested in connecting the right people. So anyone that wants to get in contact with me, please use any of those mediums. Also, you can personally email me at kennethnull@blocksafe.space.
Thank you, Kenny. Buckle up, folks. We're about to dive into the world of digital assets with a true crypto OG. Put your hands together for the venture capital legend himself, Mr. Richard Cut Shorten. Don't let the name fool you. His career has been anything but short. From Web 0.0 in the dial-up days to Web 0.3's cutting edge. Rich has seen it all. He's not just an investor, a builder, a boardroom boss, and even a legal eagle. Don't worry, he won't bore you with legalese today. So get ready for some insights, some laughs, and maybe even a poker story or two. Let's put our hands together and welcome Richard Shorten.
Wow, quite possibly the best intro I've ever received in my life.
Thank you. Thank you. I appreciate that. How are you doing today?
Fantastic. And I'm in Connecticut. So I'm in Reading, Connecticut, for those who know Connecticut, sort of Fairfield County area.
Wonderful, wonderful. Well, thank you again for joining us today. Our thought leader panelists are super excited to facilitate a wonderful conversation. So there's one question that I would like to start with. You know, Richard, your company, GlobalStake, is quickly approaching an impressive 1 billion of staking assets under management. I know Rome nor GlobalStake was built in a day. What is GlobalStake's secret sauce, and how did you become a co-founder of such a successful company?
You know, I don't know that there's secret sauce, really. A lot of the stuff is writing. I'd say maybe Jordan, who's also on this call, maybe a little bit of secret sauce, right? But you know, actually, maybe it's helpful for me to give. I didn't talk about my background earlier, and I can give sort of the 3-minute background on myself. I began life, as you alluded to, as a corporate finance and M&A attorney at a very bulge bracket firm in New York City called Cravath, Swaine and Moore. I was there for longer than most people stay at those firms. You know, doing sort of fancy high-end, you know, M&A and financing transactions. In '96, I was introduced to an entrepreneur who had just raised some private equity money, and he was building one of the first competitive telcos. So this is right on the heels of the World Trade Organization deregulated international telecom in 1996. There was a big, and this was the major you know, market opening that created all of the international telcos today, other than the state-owned ones, came out of this deregulation. And so it was really the beginning of the maybe not the technical internet, because that was formed by the government, but the competitive internet, right? The infrastructure behind it all started in this era. And so I joined that company. It was a phenomenal run. We ended up raising about 300 million of high yield debt. We brought the company public, and most importantly, we sold it before the world blew up in 2000. We sort of saw the writing on the wall. By the way, in a similar dynamic to crypto these days, like what we saw happening was there was a whole lot of value being attributed to fiber optic networks and things that were being built that clearly had value, but the market caps had gotten way ahead of themselves. You know, we were one of the larger, you know, international telcos, and we realized that like our entire business could be supported on like one fraction of a fraction of all this fiber that was being built. And so the math just didn't add up, you know, in terms of these companies being able to repay their debt. And the reason I highlight that is the world blew up in March of 2000. Fortunately, we had sold the company just before that. You know, NASDAQ plummeted. The whole world ran away from anything telecom related. And then, as a young guy, I was young then. You know, I ran into the fire that everyone else was running away from. I was now, you know, a deal guy. I understood telecom, or at least I thought I understood telecom operations, and I ran into the fire, and as a result of being one of the few people standing more than anything else, became actively involved in a lot of restructurings that came out of this era. And this era sort of coincided with hedge funds becoming a little bit less staid in their approach to the world. They would, this era is when they first started buying debt positions of bankrupt companies and then equitizing them, into ownership of the company, and doing this for companies that had assets but not cash flow, and sort of doing unique venture type transactions. And so I was very involved in a lot of those through the early 2000s. And over the course of the early 2000s into the mid 2000s, including over 2008, where the whole world changed, I sort of developed a strategy where I was 50% of my time working on these larger transactions with large hedge funds. And then the other half of my time, I was basically trying to apply the same bag of tricks to my own things that I found that were much smaller, that were, things where the check sizes weren't in the millions, they were in the hundreds of thousands. And you could do sort of similar things for just smaller companies than were being done by the much larger guys. And so, that business was often chasing, the latest volatile opportunities. So early days of SaaS software, early days of renewable energy, when solar was a big deal, we actually had a pretty large solar business. And my approach was always to be sort of half entrepreneur, half investor. That's what got me into, I mentioned earlier in the call before I started recording, there was a podcasting company that I was very involved in that we sold to iHeartMedia in 2019. And that really marked the beginning of my 100% attention to blockchain. Leading up to that point, I was certainly familiar with blockchain. I understood what was going on. I owned a little Bitcoin, but I hadn't had not dived in as a true entrepreneur, or as an investor, really, other than just buying stuff myself. For the first time, I raised a small fund around this. Over the course of the prior period, I'd raised for various businesses more than $300 million, but it was generally deal centric, right? The word that they use now to describe what I did is a fundless sponsor. That's what I did. I raised money for deals and made things happen. I raised a small fund specifically around crypto so that I could, get active in the space, and pretty quickly determined a couple of things. One is I knew that I'm not a trader. It's not what I ever was. I'm much more of an entrepreneur. I like to say we do venture capital in the way Patrikoff used to do it, like in a really concentrated, we really get involved with the companies that we're involved in. And I also, so that was number one, sort of philosophically, how we're approaching the world. And then number two, I knew that infrastructure was going to matter. I knew that the blockchain, the core infrastructure underlying blockchain, regardless of which L1 wins, regardless of which protocol goes where, regardless of whether NFTs take off or DeFi takes off, or any new application that hasn't yet been understood, infrastructure is going to matter. Picks and shovels are going to matter. And so we started off early on giving birth to our own infrastructure company as one of the first things that we did. So we seeded and started an infrastructure company, which at its inception meant staking. It meant creating a company that could do staking. And the thing that we did that was differentiated was that we did it entirely. I did it from a telecom mindset. We did it entirely on bare metal. So, which means we actually have our own data centers. We have our own hardware. We are not sending anything to AWS or to Google Cloud or to these other centralized hyperscalers, they serve a purpose very well of scaling up businesses very quickly. But as you know, or as you may know, they're very centralized. A dirty secret of Ethereum is that, something like more than 90% of institutionally held Ethereum is at AWS. Like, people don't know this. So what happens if AWS changes their regulatory perspective on this world? What happens if something technically happens at AWS or their ingress regress facilities? So we approach the world from, a bottom-up perspective of creating sort of a truly decentralized, differentiated architecture for staking that was predicated on bare metal. And that's what has become GlobalStake. And maybe I'll, pause there over the course of the past. We founded the company in late 2020, and we've grown it since then. Sort of a small ramp in 2021. Jordan joined the company about a year ago. Jordan, who's on this call, is head of institutional strategies from Coinbase. And I'd say maybe the final punchline to what we're doing is we're covering a landscape of things beyond just staking, although we do cover staking, We cover more than 30 L1s with our staking infrastructure, which puts us in a category where there's only, a handful of staking companies that have the internal sophistication and resources and systems in place to be able to support that volume of activity on that many L1s. So that is GlobalStake, and that's how I got here.
That's an amazing story, man. Like it's like I think my first question to you is, it sounds like you have been around and involved in a lot of emerging technologies. I mean, you mentioned early stages of the internet, you mentioned telecom, you mentioned, solar power and energy. What is it about blockchain and the technology that's different, do you think, from some of the other early technologies that you've been involved in?
I see the same one. So Kenny, you described the world that you see. I see exactly the same world, and I see it with maybe a longer perspective, but everything that you said is exactly what I say. And here's what I tell people from the old days, right? Who still don't, I mean, most of the people that, I guess other than my workday, they don't even understand the first thing about cryptocurrency or blockchain or anything else. They've heard of Bitcoin. But they do understand the old days, right? They understand the birth of the internet. They heard about that. And truthfully, and from my vantage point, the similarities far outweigh the differences in terms of the macro dynamics associated with the early growth of the internet and what I saw and detected there. I mean, what many people saw and detected there, right? But what I was living at that time, and what's happening today in blockchain generally, right? I think we have this unfortunate linkage to the word cryptocurrency, which probably makes people think things, it directs thinking into a particular subset of activities, right? But here's the things that I think are different. The velocity of change and the velocity of adoption of blockchain technologies is going to, and we're seeing it, far outpace the velocity of adoption of the internet. And that was pretty fast, by the way. I mean, basically late 1990s to 2010, suddenly you had Facebook, you had Snapchat. I mean, around that time, maybe it was a couple of years later, but you suddenly had these companies that were, substantial in the area of the internet coming out of the dot-com boom, right? This is happening faster. I think the reason it's happening faster is kind of maybe obvious. The internet already exists. You have, tens of thousands, if not hundreds of thousands of developers working on, distributed applications, the software. There's many more software languages. There's many more platforms to build on. So the underlying, activity level of the worker bees who are supporting the growth of this technology is just simply much larger than it was in the early days of the internet, where people were trying to move from dial-up to DSL to, something else to, whatever, right? Like it was just there were many more hurdles to begin development. And then I think the second observation that I personally have is, the internet was about information and language. While there are many applications that aren't centered around money, crypto and blockchain is about money. And so, that is heavily about money. And so when you inject sort of fast development pace, technological innovation, money, I think that the wave that there was in the internet, and I truly believe this, I think that the magnitude of change experienced by the internet, I think that the magnitude of change that we're going to experience from blockchain is going to be larger because it affects money, because it affects economies. It's going to manifest itself in different ways. So, probably the visible impact of the internet may have been bigger, right? Because everybody has a website now and you see what's happening. But what's going to happen to the underlying rails of technology, and data, so let's call it database technology, right? At the end of the day, that's what blockchains are, right? They're slow public databases. It's something we like to say in diligence conversations with teams. We often say, why is it that you need to be in a slow public database in order to do your blockchain project, right? It sort of disarms them, and it answers the question, right? Like none of this stuff is yet as fast as, running your own Oracle server, or any other, doing, something centralized, right? So, but it's very different in its impact on society and its impact on and its empowerment of individuals. And I don't think we've even begun to see the magnitude of impact that's going to come from much of that stuff.
I agree wholeheartedly with you specifically about the points that the disruptiveness and the potential disruptiveness of blockchain technology. That kind of brings us to the next question, which is a question that a lot of people actually don't like to get asked. I know I don't personally, because it's we're still very early in how these things work out, but much like the internet itself, affecting many different areas and across different niches. Blockchain also has this plethora of niches that we're currently looking into. You have NFTs, you have DeFi, you have the capabilities with RWAs, you have liquid staking, and all these types of things. Do you have any particular areas, niches in the market? I mean, entertainment's a good example, gaming, these types of things. Do you have any of those that you have looked at maybe more heavily than others that you feel perhaps in this next bull cycle even that might be the narrative? Because we have this kind of social media narrative that people talk about, well, what is going to be the driver of the cycle? We've seen DeFi be the driver of a cycle. We've seen NFTs be the driver of the cycle. What do you think are some possibilities of the driver of this upcoming bull cycle that we anticipate?
Yeah, it's a great question, right? I still think that the primary driver for blockchain will be financial applications, at least over the near term. I think, I'll say that broadly, right? Now, which variety of financial applications, right? The DeFi, when we say, I think it'll be true DeFi, right? So let's put it this way. The DeFi that was experienced in 2020 was really, early beta applications delivering their own token to people who use those applications, and the token spiking in value, and people, quote unquote, farming because they were rewarded in the underlying token of the project that they, supported, and, everything accelerated and they were able to sell for a lot of asset appreciation. But it was the very early days. If when, and I agree with you, things are starting to thaw out. When we see the actual applications that exist in, borrowing and lending, and, as you said, liquid staking, and, yield opportunities. And there are now yield opportunities on Bitcoin that are beginning to be, surfaced, and there are institutional lending opportunities. And as you said, real world assets. I heard this morning, I was on a panel with a guy who runs blockchain at Bain Capital, and he said, look, we have a client that traded $5 billion in repo transactions in one trade on the blockchain. There's no press release. There's no anything about it, but this is a $5 billion transaction occurring on blockchain. And that's what's happening underneath the hood. Now, who's making money from that? Well, nobody's making money from that, really, other than the bank that has a lower cost structure to affect that repo transaction. But the magnitude of ripple effect that kind of activity is going to have when you move through, I think that's going to be, I still think that real world assets, and meaning bringing treasuries online, bringing receivables, onto the blockchain as a way to finance them and other things. I think that we're definitely going to see a lot of adoption for that, but it's going to be in financial applications to start. He's going to come up with big friend tech trends or something else that's going to transform, the use case. I do believe in NFTs as a technology opportunity. Haven't yet seen the thing that will transform the world there, although, certainly I like NFTs, and I think it's a cool collectible, market. But I think, and I guess one other thing to our thesis and how we approach things is that we're becoming more, as I alluded to, with our operating business, we're very focused at the infrastructure level. That gives us a lot of visibility into a lot of the things that are happening at the lowest level in the blockchain, right? And one of the things that's driving us towards is to focus on things and opportunities that hinge on interoperability, right? I believe that, the next wave of massive crypto activity, in my opinion, is going to involve a layer of abstraction away from any monolith ecosystem. I'm in this in Ethereum, I'm in this in Solana, I'm in this. I think that the true proliferation of applications, and we're at the very early days of this, but it's going to come from an application that nobody, the bulk of the users have no idea what blockchain they're on. And for that matter, the series of transactions that they affect may cross 4 blockchains in different ways and in different, ways, because they're leveraging some of this over here and some of that over there. I think whenever that application, whatever it may be, occurs, I think that's going to be the transformative, moment or the next transformative moment in blockchain, in my personal opinion.
That's very interesting because I actually had a conversation kind of pertaining to this because there's been obviously crypto has layers of kind of the know. You have your people that have been in for a decade and they kind of have these private conversations and investments and stuff going on. And there's different levels of this as it goes up to the, very new retail investor. But one of the big trends that I see circulating currently is these swaps that have come up, these cross-chain instant swaps like Rango, and there's several of them out there that are basically allowing the transition of assets across multiple blockchains instantly, as opposed to, a year and a half ago, we were waiting 3 weeks for, to upload assets to Arbitrum or to Optimism or so forth. And it's becoming like a very talked about thing. So I agree with you on that. I think that's pretty amazing. I know I've asked several questions here. Does anybody else have something they'd like to bring to Richard here? This is amazing. I'm learning a lot and enjoying this.
I actually have an insight I'd like to add. I think Kenneth is asking absolute right hook, brilliant questions that are super relevant. But Richard, I want to take it back for some of the younger guys and gals, the sub 1 decade entrepreneur or potentially solopreneur that are, in the social mediaification of Web 2. Everybody's saying this way, that way, something's going on. You've got several decades of experience as an entrepreneur at a high level under your belt. And so I guess the question would be, for those new entrepreneurs sub a decade, what are those KPIs or those things that you're looking for to stay early? How are you staying at an edge early on the large global macro trends of where tech in the world and things are going? What are those things that you're looking for, and how do you stay on that edge?
Yeah, it's a great question. I'm a little bit of a contrarian here. I think that my perspective may be a little bit different from the conventional wisdom on this. Is your archetypical Silicon Valley VC would say giant market, disruptive opportunity, good team. The better the team, the better. But if you have a giant market and a massively
Is Richard frozen for anybody else?
Yeah, I think.
I think we're all waiting for somebody to say something.
Back. He's back.
Are you back?
Oh, sorry.
Richard, you froze.
I apologize. Sorry about that. So I'm sorry when I stopped. What I was saying is my perspective is a little bit different than the typical Silicon Valley VC, in as much as I think that the conventional wisdom is find giant markets. That's of course good, but from my vantage point, less critical. Find giant markets, find massively disruptive opportunities, look for the 5,000x opportunity. That's how, as a fund, you make money when you spread bets across everything. And if you look at almost every massively successful venture fund, when you look at where the returns come from, it's like a handful of things that drive all of the economics to that fund, right? Our world's a little bit different because we're smaller and we're very entrepreneur centric. We're focusing on slightly different things. I mean, we're betting on ourselves to some extent, and in many of the things we're involved in. But what I would say is, revenues are grossly underestimated by most things. 2 years ago, I was at a native crypto conference where where the teams were standing up and saying, money's easy to get. Like, we don't need to worry about revenues. Capital's easy. And those same teams a year later were broken up, and disbanded. The truth is, there's just no substitute for revenue and for actually driving, opportunities through your platform. I think it's a very rare animal. They exist, but they are unicorns where you can create massive value opportunity without having clear paths and near-ish term paths to revenue. So that's something where I think many venture capitalists don't encourage entrepreneurs in that direction. But, think about it. Like, I think I'm being a little bit critical of the traditional venture capital world, but, their game is to get the lottery ticket. Like, they want to drive the lottery ticket, and, they're interested in the entrepreneur being a part of the lottery ticket exercise. And as long as they're, if they're placing moderate size bets for reasonably good outcomes, that doesn't get them the lottery ticket. It might work well for the entrepreneur. It might allow them to pay their bills, build their family, get a mortgage, do the stuff that they need to do as an entrepreneur, but it doesn't allow the VC to exit with huge number, right? So I think that's one thing that sort of entrepreneurs should be mindful of, who you're working for and how big of a bet you're making, and are you close to revenue or not, and then the other thing I would say is, from my vantage point, it's 110% about execution. Just meaning, even having a somewhat mediocre business plan to, go do, hopefully I don't somebody who has some artistic ability and they want to go do a new NFT project. I mean, that certainly would not be in vogue generally in today's crypto market. Somebody saying, hey, I'm going to go create a new NFT launch, and I'm going to do the following thing, and I'm going to mint 10,000 of them, and I'm going to sell it on Ethereum. I'm going to put it on Ethereum, and I think I'm going to be able to make $500,000, when I sell this and I build a community off of it, right? That's a pretty contrarian perspective today. That worked a year and a half ago, but I don't think it would work today. But what I'd say is, if somebody's smart and scrappy and they have a community and they know how to sell, I think that people are making money doing that today. I think that they're entrepreneurs and teams executing to make that happen. Now, they're probably not raising venture money to go make that happen. But again, I think that's a little bit overrated, how much venture money is needed for many of these ideas, particularly the ethos of crypto is this decentralized, do it yourself, less dependency on the man, to go make things happen. And yeah, look, if you want to go build $100 million L2 protocol that's going to be using zero knowledge to transform the world, you're going to need to raise a sizable amount of money from venture capitalists to go make that. And you're basically going to, be building a company. But there are lots and lots of ways to get involved and get active in the space that don't require that. So, again, depending upon where you are in the spectrum, in terms of what, your personal ambitions are, I think that those two things, matter most of all. Sort of, having good sight to revenues, and just being confident that you're executing like a maniac and not letting days go by.
That was brilliant. And one thing to lead off, I feel like it's important to define. So you've got the team, you got the project, the vision, the idea for the business plan. Can you please define a unicorn from your perspective, and what are those things that, as a VC, you're looking at as, okay, this is a carrot under the dirt. This is a potential unicorn right here. What does that look like?
Yeah, I'm bad at identifying unicorns until they start to become unicorns. Personally, I'll tell you a funny story. Actually, here's the funny story part of this. In the hubris category, I was on the board through this period of restructuring activity. I was on the board of a company called Movie Gallery. Movie Gallery was number 2 to Blockbuster in the United States. So Blockbuster was the giant video rental company. Movie Gallery was number 2. It was probably half the size. I mean, it was a big company, but it's probably about half the size. It did have a subsidiary called Game Crazy, which competed with GameStop. So, it had some stores like that, right? But it was essentially a video rental place, right? And I went on the board when it went through the first bankruptcy, and, investors wanted to resuscitate it and restore the balance sheet. And basically it was straight down from, bankruptcy number 1 only went straight down from there with the advent of all these new technologies, right? And what was interesting was, what killed that company the second time around, it actually wasn't streaming. That's what you would think today. It was actually Redbox, those little kiosks that were put in all the supermarkets, where it was a lot easier to get, videos. And this new thing that was emerging called Netflix, right? Where people would get stuff in the mail. And so my story about identifying unicorns and how bad I am at it, I was literally on the board of a company where every week we were being sent materials about the market, the evolution, what was changing, how things were moving. We were talking about streaming. We were talking about this. I had Netflix on my radar every single day, and I never bought Netflix during this whole period, as it went to like $1 billion. I later realized, hold on, what were you doing? You weren't even paying attention to the world. So there you go. That's my moment of, anti-hubris. I just missed that one. Don't know how, but I did. I think the thing about, the true unicorns, the things that are there because they belong there. I think there's a universe of unicorn today that's a manufactured unicorn. You get a bunch of high profile, VCs and, private equity firms in a room, and they say, this is worth $50 million to start. And then they raise some more money and they say, it's now 500 because they've done X, Y, and Z. And then lo and behold, they raise more money and they bring in a few other people and suddenly it's $1 billion and they call it a unicorn. I think there's a lot of manufactured, growth. And in some cases that works, of course, in some cases they truly are differentiating the world, but I think there's a lot more of that to the earlier, venture model kind of dynamics. I think there's more of that than there needs to be. I think the true nascent unicorns you see at the grassroots level, right? You see the activity on chain in the case of a blockchain company. You just look at it, you can look at the on-chain data and you're like, oh my God, like here's another data point that I heard today that was interesting to me. Last week was the first week that the number one downloaded crypto app was not Coinbase. It was Phantom Wallet. Like that's an interesting data point to me, to the adoption of Solana, to where that ecosystem is going, et cetera. Now, is that a specific unicorn? No. But it's an indicator. So in my view, I think the unicorns that matter and that have the most durability, you see them developing in front of your eyes, and often they've already grown quite a bit in terms of market cap. But when you're right, they're going to grow 5 or 10 times more than that, right? When you see it happening. And I think that the organic activity is one that makes a lot more sense. Amazon's another good example of one where, I watched that one grow, seeing from my vantage point, the growth of AWS, right? Like AWS didn't exist, of course, at the beginning of Amazon, but it started to appear in the mid 2000s, 2005. I think it was founded in 2002, but it started to appear, in the mid 2000s, and you could just see that there was this underlying engine happening at Amazon. And this one I didn't miss. At the same time, I thought, okay, this is an interesting technology platform play that's completely independent of anything else that they're doing. And at the same time, Facebook, these social media networks were skyrocketing. And I'm thinking, hold on, like I purchase a lot of stuff on Amazon, and everybody's tracking everybody's footprint and their digital ads and everything else. Doesn't Amazon have a more interesting data set than than Facebook does? Amazon knows what I'm spending. Like that's way more interesting than, which video of a kid, biting another kid's finger do I watch, right? Like spending patterns drives economics. And so, those are the kind of like aha moments that don't happen all the time, but they're born from like actual activity, actual things that anybody can see, the stuff you hear from your friends and family, and then you just sort of connect the dots and you can see the upward trajectory, and hopefully you can, become a part of it. I think that's the truth of it. Nobody finds a unicorn at stage one with 3 guys in a room. That's luck. I don't care who you are. It's luck if you're Andreessen Horowitz, it's luck. The guy just happened to come into your office, and they're more likely to come into your office than another office, but it's still luck.
One more lead off question that, and then that's all my questions. But so the sort of idea of the fabrication of, okay, you get a couple big wigs, critically acclaimed names into a room and fabricate a company up to $1 billion valuation. Is that something that you feel we've seen a lot in the blockchain sector that has maybe led to a fear modality and market sentiment in the last coming years? And how cumulatively as a whole space, as Web3, the overview, can we work to overcome that?
Yeah, it's a great question. I mean, personally, I think that a lot of the starting valuations of very early stage crypto private rounds are too high. I just think that they're too high in absolute terms. It doesn't mean the company is not valuable. It doesn't mean that there's not an opportunity. But a company that's just getting started, that's raising money at $100 million valuation, and we see these all the time. It's not a value investor story for sure, right? Now, that being said, as I'm sure you and Kenny and others here who are native have experienced, like, doesn't really matter if they get a token listed really quickly and it spikes to 5x where it is. It doesn't matter that, the implied valuation is 500 million, as long as you start and you can get out fast enough and whatever. I think that those are just indicators of an immature market, right? A lot of things that are liquid in crypto should, it's wrong to say should not be liquid, because they are, but I think that making, a lot of crypto being liquid can lend itself towards, the worst behaviors in people and the worst behaviors in institutions and manipulation and all sorts of things, which definitely exists, in the world of crypto. And so, I think that, being very, conservative is fine in crypto because it's so volatile and the opportunities are so big to begin with that if you're the conservative person, you're still going to do great. You don't have to be DeFi farming or, whatever, buying the latest meme coin and hoping that it goes up to do well. Like I truly believe that the magnitude of change occurring in this sector is so big that all you need to do is, and the better you do it, of course, I think the better you'll do, but is to frame up, the equivalent of like the lifeboat in the movie with Tom Hanks where he was stranded on the island, like just like get the freaking thing together, raise a little sail, hold on tight, get something in the water, and the tsunami will take you someplace interesting. You got to hold on tight, and it definitely will be volatile. But this is a rising tide, kind of thing. And the types of bets that we've made, which we haven't talked about a ton here, but in the infrastructure story is about that. It's we have no idea which underlying L1s or other blockchains are going to be the ones that sustain the maximum value over the long term, but I know some of them will. And if you're in the game of providing infrastructure support to institutions who are active in all of them, and you're building the tooling, as Jeff, who's on the phone here, is a client of GlobalStake, like he's working through with us, some of both the innovations and the headaches that we're doing as we build the tooling for this. Right. It's not easy to do, but that kind of blocking and tackling will end up creating an on-ramp that I think will, allow us to hold on to our little lifeboat in a really interesting way as the tsunami comes. That's the philosophy.
Yeah. Richard, to comment on a couple things, and I'll be moving back through a lot of what you said, but just the most recent thing you said, we couldn't agree with you more. We see such a beautifully inefficient market. This market is so mispriced for the potential of what's coming. And as my partner often says, he says, hey, this is such a lonely space. There's no one to talk to about it. And that just tells us how early we are. And to go to something you said long ago, the maturation where we are in this cycle. You said now you're seeing developers and founders building real world use cases. And we see the same thing from an investor standpoint. We saw, the white paper bull market of 2017, if you will. Then you move to the bull market of the DeFi summer, the NFT, the explosion of what's possible. But still really nothing too tangible. Very few people were using DeFi at that point. In fact, my partner, he's still the only one we found when we have these conversations where he was part of the original Uniswap airdrop. You just don't find those folks. And it seems so like everybody would have been involved in that by now. But, and now what we call this bull market, and we believe we're new into this bull market cycle, which again, like you said, put your sail up, catch the winds and go. Just make good decisions. But we think 70% of the success is identifying when that washout happens and catching that new early bull market cycle. Now just make good decisions based on that, because it really washes out maybe those bad developers, bad business people, and bad actors. So now we're coming into this new bull market, which we call a very selective bull market, which is what you were alluding to earlier, which is investors from our standpoint is looking for prove where the revenue is going to come from, prove your use case, your token utility, your tokenomics, and your staying power of those creations, of those railroads, those toll roads of the future next iteration of Web3. So yeah, we couldn't agree with you more, and I think well said, and just wanted to sum up a lot of those pieces and parts.
Yeah, I totally agree with what you just said. I think something you alluded to, but is worth a specific mention here, is risk management in this space is a very different thing than risk management in traditional investing in traditional spaces. I internally, admittedly, this is an informal threshold. It really ought to be a formal threshold. I want to go to sleep every night knowing if I wake up and the market's down 40%, I'm okay. Like literally those are the standards. And that has happened. It's not like it doesn't happen, right? And so you have to be very thoughtful about how you allocate capital to the winners, right? There's a temptation, particularly somebody who's concentrated investor like me, that when something's working, you just pile into it, right? And that's certainly conventional wisdom in the stock market, right? When you get your winners, you lean on them hard, and you often the value comes from the last piece that you didn't sell, right? Like but in crypto, you got to be very mindful of risk. There's so many different vantage points about that. So that's something to certainly keep in mind. Never, ever have all your eggs in one basket. And the definition of one basket is multifaceted here, right? One basket in terms of specific tokens, one basket in terms of one exchange, one basket in terms of custodians, one basket in terms of staking provider. One of the things that Jordan has done a lot of work on. Yeah, exactly right. One of the things that Jordan's done a lot of work on at GlobalStake, and obviously Jeff heard some of this, is if you're staking in an L1 network and you're receiving yield on your tokens because you're doing that, you should be diversified in your stake in addition to all of the other elements of diversification. Forget about the narratives which we think are powerful, that bare metal is better and you have lower latency and it's more decentralized. Forget about all that. Just let's assume that it's all the same. You should be diversifying among multiple parties just from a corporate risk, standpoint, right? From your own stake.
Yeah.
So that's a overall message that I think all of us get a little bit lazy with and don't as vigilantly as we should monitor where exactly, you have those single points of risk.
Yeah, we just had a conversation yesterday with a big TradFi gentleman that oversees 12 billion for high net worth RIA. And yeah, the difference between their risk management and our risk management is immense. And my partner and I often say the opportunity we have collectively here, the opportunity is in the complexity for TradFi to figure out what we've all figured out, and all those things, bullet points you just hit as far as risk goes, that keep us up at night, and diversifying that risk and making sure, you wake up and, it's not a bad morning, is tremendous. And a lot of people give up on the space right now. That ease, as the infrastructure builds out, that ease and that complexity will shrink. The ease will come in, like going to Schwab now and buying any one of the 3,500 stocks on the stock market exchanges. And the complexity will come back to make it easy. And that's when, the masses start entering, as you were talking about earlier too. But for us all here that are early, that's where we see the alpha. So when the certainty comes in, the alpha has been squeezed, and you just want to be ahead of that. And if you're early in a bull market cycle and that complexity is getting worked out through the infrastructure builds, then you've got a lot of wind in your sails.
You raised a really good point with the complexity point too. Like, in crypto, you come across lots of very, very smart people. Right. Mm-hmm. I think there are two types of smart people. There's the smart people who like to communicate with very big words and a lot of sophistication and communicate to you how smart they are. There's also the smart people, which sometimes includes the first set, that are smart enough to know how much they don't know about this space, how much they don't know at a technical level, how much they don't know. You take the most sophisticated DeFi trader on this phone. Do you know really what Jane Street is doing? Do you know how they've architected their infrastructure and Wintermute has in order to capture and steal your steal is maybe the wrong word, but capitalize on your trend? Like the level of sophistication here is immense. Nobody knows it all. And the opportunity, as you said, is huge in just knowing a little. And, basically, getting involved in areas where you have a pretty high confidence level that you understand what's going on. You don't need to gamble on NFTs. You don't need to jump into, DeFi and the latest thing that, happens on, whatever, insert new DEX that has some sophisticated perp model or whatever it might be. You don't have to do that. If you understand it, if you're an options trader, I would say go for it, right? Like that's exactly where you belong. If I was an options trader, oh my gosh, I would have been in crypto for the past 5 years and probably be making, a lot more money, because this is perfect for that profile of individual, right? But most of the world are not options traders on Wall Street, right? And so, I think you don't have to guess, and you don't have to be the smartest person in the room. The smartest people in crypto I see are willing to say, like, that's not my area. I don't understand it. I know somebody who can help answer this in depth, but you got to have a little bit of self-awareness about what you don't know.
Yeah, patient investing, and don't chase the hot topics, the hot meme coins, and everything else. Yeah, building the infrastructure, as you said earlier, picks and shovels. I grew up in the gold country of California, and you heard all the stories of the gold miner being 10 feet away and he got rich, and his buddies on either side, didn't find much. But it was the guys running the supply chains from Modesto, Oakdale, San Francisco up into the hills, and the guys that built the hotels and sold the picks and shovels, and Levi Strauss that made long-term consistent wealth. And those guys are patient investors. They built a business. They sat on it. They went through the cycles. They saw everybody getting rich around them, and they said, "No, I'm just going to keep making jeans." And they're still around 150 years later.
You don't have to be a big shot, right? Like, I think, when we started the infrastructure business, we intentionally focused on smaller ecosystems. We did that because they got less attention from everyone else. And also in many cases, by the way, they got a lot more yield. The conventional wisdom when you look at staking providers, even today, is they judge, you did this in the intro, you judge a staking provider by what its assets under management are, right? I can tell you this, guys, we make a lot more money on a single Polkadot node than we do on 10 times that amount of staked Ethereum, like as an example, right? The business model economics are very different from chain to chain to chain. And understanding these nuances is what obviously entrepreneurship is all about. But the truth is this is a very, very early space, and people are not understanding where the actual economics are dropping and where they're sustainable, where they're not sustainable, right? In many places, they're temporary and you can capitalize upon them in a temporary way, but they're not long-term sustainable.
Yep.
All right. I like to, one of the things I really love to do is sort of put myself in the shoes of, someone else at a different stage in their process. So I'm a 1-year entrepreneur. I haven't touched blockchain at all, Web3. Okay, none of this is true. This is an analogy. But so if I'm understanding correctly, and I just listened to this entire call, and obviously this is NFA, not financial advice, DYOR, do your own research. But if I'm understanding this correctly, to me, it sounds like what's cumulatively being said here is that blockchain as a whole is the largest blue ocean. It's quarter one of 2024 right now. Blockchain, if you are looking to be early and be on that edge of scale and where the world is going, is blockchain the biggest blue ocean right now that I should be paying attention to?
100%.
Yeah, my answer is absolutely yes as an individual, right? I could say I've been convinced, and I think we see activity, AI, maybe a bigger macro trend that over 10 years may transform more of how we live than crypto. And there are intersections between AI and crypto. And as everybody here probably knows, the venture capitalists all rushed into AI last year, right? Instead of crypto. But AI is not approachable as an end user investor. You can't go use it today other than to do your term paper faster than you otherwise would, right? So the truth is that as an opportunity for individual participants to be involved at any level, whether it's as an investor or as a builder or as an operator, or even just as a community member participating in some of the DAOs and the communities that have been born out of crypto, it is absolutely that blue ocean. And I think that we have not even seen the types of impacts that we'll see in 5 years from now. I think that there will be some really interesting ways that this international, global empowerment of individuals, it's going to start in some, bringing some really interesting things, to bear. Yeah, for sure. So I agree with that 100%. And that's the way that we try to approach things, even though we're quasi-institutional, we're not big, but I approach it the same way. I think that's how you find winning opportunities, is to look at it like a regular human being.
Yeah, and Jacob, we agree 100%. If you look at all the iterations of the internet before that have come, Web 1, Web 2, and now Web 3, we think Web 3 and blockchain will create the value creation that'll be created will supersede the other iterations that came before it combined. When you add all of DeFi, when you take, all of social media, and all you really have to do is understand blockchain to the point where you see that it provides for digital ownership, which we don't have now. It provides efficiencies for business, individuals, anybody using it. Speed, efficiency, friction is reduced, and that is just money being wrung out of business models. I could give you use cases, for hours, but just think of remittances across the country. My sister right now lives in Kazakhstan. If I had to Western Union her money, it might cost me, and I don't know, I haven't had to do it, minimum 8%, maybe 14%, or I could pick up, and I'd have to go down to Western Union, cash, send her $1,000, but really it's 860. She has to drive an hour and a half somewhere to get it. Now she's got cash. Somebody might rob her on the way out. And or I could just simply do it for $2 and send her Bitcoin or another cryptocurrency, right? And so when you see that kind of instantaneous cash flow, but you go to institutions that are sending quadrillions of dollars per year, you just go, hey, if it can save them money, if it can reduce friction, increase speed, increase accuracy, you've got a product that is going to change the world.
I know we got to wrap up soon. I want to give my one answer to the hypothetical person that you're describing, Jacob. I think it's actually pretty easy to get involved. Meaning the thing you got to do first is find the types of projects that you're interested in and get into their Discords. So yes, older people, you got to learn how to use Discord. You got to, by the way, learn how to secure Discord and other things. It's a very ripe area for problems for getting hacked. But like, you get into Discord servers. You also got to have Telegram. Like, these are the tools of the trade. You got to learn how to communicate with these teams through these modalities, as dysfunctional as they are, as non-enterprise as they are. That's how you're going to get into the scrum. So you got to go dig into that. Get on Twitter and follow what's going on. And with those three tools, you're going to know what's happening in these ecosystems. You will be embraced, shockingly, by senior people, junior people, everyone in between. I can say that without an exception. Like, if you just jump into these communities, they embrace you and they try to help you, steer you in directions to go someplace. And if I personally was that individual, let's assume I'm a technology center, I'm a developer, I have some basic skills and, basic languages. And what I would be focused on right now is using the tooling that's becoming available to make blockchain more accessible. There are lots of projects that are working on basically accessibility tooling to blockchain. I wouldn't be trying to invent something new in blockchain. I would be coming up with an idea that blends Web 2, normal website usage and blockchain in some kind of innovative way. And you'd basically be stitching together, doing normal Web 2 stuff, using these tools to link it into blockchain, and suddenly you have a blockchain application that is usable. I think that's where the next frontier is going to be, people making applications that are front-facing, that are usable by regular people, that they don't even necessarily know the blockchain's happening behind the scenes.
Agreed.
And I know we're wrapping up here real quick, but it's not another question. It's just a commentary on that, because I think it's really important for the fictitious individual that I had in mind, right? In Web 2, I'm approaching 700,000 followers. Whoop-de-doo, that's so great. But the problem is, like, one day I wake up and I said something, slightly out of pocket that was a little edgy that I don't own anything, actually. Like, I could wake up one day, it could all be gone. That's solved with blockchain. Proof of ownership, that's solved with blockchain. I could go down the rabbit hole. There's so many different use cases that this technology is going to fundamentally change effectively every industry in the world. And like been said many times already, we are early. So
yeah,
imagine.
It's fun.
Thank
Fun
you.
space to be in.
Absolutely. You guys, thank you so much. Richard, we very much appreciate you today. And everyone else, thank you very, very much. Alan, we have about 30 seconds. Can you quickly wrap up with prayer?
Yes. Thank you, everyone, for joining us. Bow our heads and pray. Dear God, thank you so much for this a great day that we can get together, and thank you for all the speakers that's coming on to our show. Thank you for Richard being on our show to inspire us and educate us about staking capabilities at his firm, and what this financial instrument and technology is going to do for the rest of the world in the future. May we take time to re-listen and replay this this show to learn more about where this technology is going to go, and continue to bless us in all things that we do, protect us from evil, and just make it let everyone have a great weekend. In Jesus' name, amen.